Yeah. How you doing, man?
I'm good. How are you?
Good.
It's
You are
nice.
not living the Cabo life, but you're on your way soon to Tulum, right?
Yeah, but actually, Cabo's getting one guy I know in there is getting on a flight to get out. The friend Victor and Kanoyalani, they're batting down all their properties or boarding them up.
Oh,
Like we got some scares out there, but we never really saw too bad. But one's directly, you know how I was showing you those images where they veer off this way or veer off into the Gulf. This one's dead center heading to Cabo.
ooh.
So I was actually going to check in with them today, but yeah, this one people are starting to blow dodge on Cabo, so we got out of there pretty good timing. Well, you got out of there a week before I did, so yeah,
How was your last week? It looks
it
like
was
you guys did
good.
some fun based off some of the pictures you posted.
Yeah, it was good. I focused mainly on trying to get Kingston to surf because, as you know, the waves were really big when we were there. And then they picked up again. He only got one good day of really good surf, and the rest was just too big for him. But it was good. It's a little different trip than Palmia, our timeshare. So it's cool. We do more in town stuff, but still, I never got to fight with my fight team. It was so damn hot, as you know. It's just you have all the good intentions of doing all this stuff, and then you get there and you're just like, I'm done. I don't even want to do anything. So
Of course.
yeah, but so I never got to
Yeah.
fight with them. I feel bad, but we are gonna go. We dropped Kingston off on Wednesday or Thursday. I'm not sure. Then we go to Tulum, and then when we come back, they want to go camping. I'm not a big camper, so I don't know how that's going to work. But they want to go to a surf spot like 6 hours north of Cabo. That's a really good right break. It's like famously well known. Um, so I'm going to probably do. I left all my boards
How
there.
close is that to Ensenada?
Oh, it's far. So it's like a drive from like LA where we are, Orange County, is 24 hours. So it's like 1,000 miles. So it's not even, yeah, it's not even close to Ensenada.
Okay. Yeah, yeah. No,
But
because Ensenada only takes us like 3 hours or 4 hours, I guess. At least for me.
yeah.
I
So
think. I don't know. I haven't done that ever though. I don't. No, I did do it once. There was one time I drove all the way down there.
oh, you're one up on me. I've only driven to Porto Nuevo, which is just like outside of Rosarito.
That's
Took
the lobster spot.
Yeah, and then I took a cruise ship to Ensenada, and it didn't end well. I got kicked out of bars, and I was with my parents. I still got kicked out of bars. That's another podcast. That's another
That's the other savage side of you that
story.
I'm still learning about.
Yeah, that's the 20-year-old savage. This is the more refined savage right now.
More focused savage.
Yeah, so how you been?
I've been good, just I was really excited to get back. Sorry, like I know the vacation was awesome and everything, but
Yeah.
I had so many things spinning in my head of what I wanted to do when I got back, and it started getting, I don't know, I started getting antsy and trying to crawl out of my skin a little bit of just wanting to get back to put these models together. I've already put them together. I did that and a lot more. I don't know if you remember that, like one of the guys that I had working for me just ghosted me and just left all of a sudden. And so I started to look for another person, but because I wanted something now, I automated his procedure. So he's now a computer.
A
And
VA.
literally, I just, saved not having to deal with an extra employee here by automating his job.
So you're ready for another vacation then. If you get that guy's all automated now, now you're ready to go back.
Somebody's got to run those models yet, but we have another person that started in early July, and yeah, I'm getting up to speed on everything, but he's more focused on the fixed income side and not the SPAC side.
Yeah.
So he will take care of that automation side of things, and I will take care of all the SPAC automation that I did.
Okay. So to let people know, SPACs and all that, me and Jeremy met in Cabo. We were having breakfast, and our kids started jujitsu and started rolling around hills and stuff. And so we met.
His kid did jujitsu, not mine. Mine was the one on the bottom at all times.
For me, it was a normal Tuesday. You were like, "Are they safe?" I said, "Yeah, pretty good. If your son knows how to tap, you should do well." But anyway, as you do when you meet somebody, oh, what do you do? What do you do? And I was just starting to get into investing, and I had researched some SPACs and this and that. So I am like at the super beginning level, not even beginning. I'm just like nosing through books and stuff. And Jeremy, I'll let him tell you what he does, but I told him, I remember when we first met, I said, let's go to the pool. I'm going to try to rack your brain as much as I could, without ruining your vacation. Cause I know people want to get away from get away from their day-to-day shit. But, so tell people what you do, what you're involved in, and how you got into it.
Well, that's a pretty long process. I'll start with how I got into it, and then where I am today. So I graduated from UCLA back in '99 with a BA in business economics and a minor in accounting. Loved the school, still love the school. First time Josh and I met, it was during this recent Final Four run for UCLA, and I was glued to my little tiny phone because that was the only way that I can find the game, and really excited. So he got to see what kind of passion I have there. Came out of UCLA as an accountant, kind of a boring auditor. Some people don't call it boring. The only people that don't call it boring are the people that worked in it, and realized that is not where I wanted to continue my career. But I was pretty good at it, patting my back a little bit there. Really moved up the ranks over there, and then had started at a company called Post Advisory Group, which is a fixed income manager. They do bonds. I knew nothing about bonds. My experience at UCLA was more accounting focused and very much not about securities. But I'd always had a passion. So when I shifted jobs, I started in the accounting department and immediately went into their what they call an operations department, where I put together performance and pricing for investing. And I really had a desire to go to an investment shop. I had been investing personally since I was 13. When I got a bar mitzvah, that was what I spent all my gifts on as far as the monetary side of things, and had been investing since then. Not the best equity investor, I'll admit that, but I ended up having a real knack for the bond side of things, and learned a lot about bonds over the first couple of years that I was there. I started at the lowest possible level, I think, other than maybe being an admin assistant. The next level up was where I started, and quickly moved up the ranks. And I moved up the ranks by working my butt off. They gave me projects, and they'd expect the project to be done in a month, and I would get it done in a week, because I would just work all hours. And it was easy. It wasn't as if I was trying to impress. I really just loved doing what I was doing. And they quickly made me supervisor. Then I started working on ad hoc projects for the chief investment officer, whose name is Larry Post, namesake of Post Advisory. And he really took me under his wing. And then I decided I want to go to MBA school after a couple of years. He wrote me a recommendation. I only applied to the top of the top. I got rejected at all 5 except for one that basically said, just apply next year and you'll get in. I don't want to get into that. But also, when I asked Larry for the recommendation, I kind of already knew I wasn't going to go to MBA school, because he basically said, why don't you just he didn't say get an MBA, why don't you just stay here and immediately become on the investment team and work directly under me? And the reason I wanted to go to MBA school, so I can switch my career from being focused on accounting or operations, or eventually becoming a CFO. I really like the investment side of things. So that was why I wanted to get an MBA. Mm-hmm. And then when I transitioned over to the investment side with Larry, that was a dream come true. He taught me everything quantitative about the markets. And then I spent about 50% of my time in his office doing all these models and he wanted to create an algorithm and he's not technologically savvy at all, but he wanted to create an algorithm of how the market behaves. How does the high yield market behave? How do different bonds behave? And I won't get into all the details, but it was more quantitative driven. And we realized there was no way to be able to.
Sorry, that's the Cabo friends trying to FaceTime Kingston.
Okay.
I'll edit this out.
Okay, no worries.
Oh man, the kid. Okay, sorry, go ahead.
So we ended up realizing that there is no algorithm. Every investment is different. Every industry is different. But while doing this, I learned a lot about how the market kind of breathes. So I learned what we call the trading side of things, and that is kind of understanding value and not just fundamentals on downside protection. Now, while I was in his office doing all this, we started with me just listening to him dissect different investments with different analysts that he had working for him, and that was part of my team. And at the beginning, it was just listen. Then over time, one thing that you are when you're an auditor and an accountant is you're trained to be skeptical. Anything that somebody tells you, you have to automatically assume that it was a lie, and then you challenge them on it and you try to get support to prove their point. At least that's a good auditor. There are different, but that's how I approached it. And Larry over time learned that I'm a very skeptical person when it comes to investments. I don't take anything at face value. And from that standpoint, he started trusting me a little bit about, okay, the analyst doesn't have to come into the office. Jeremy, why don't you just go ask him this question? And he knew that when I would go and ask the question, I would get an answer. And I wouldn't just go back to Larry and say, oh, this was the answer, and then wait for Larry to ask, oh, here's the other 50 questions that I have because of that answer. Yeah. He knew that when he sent me off on a task, that I would ask the question and ask the follow-up questions behind it until I got to the meat of what was important. And that's what I think I've learned to do over my time. He, in 2009, upgraded me to be part of the portfolio management team. By 2014, I became the chief investment officer of a certain thing called the short duration high yield mandates at Post Advisory Group. Actually, 2013 was announced. 2014, I officially became that. And due to a variety of reasons, none of which had to do with greed. It has to do with things at the company changing. One of them was Larry had retired, and there was another company that bought our company. We didn't see really eye to eye on how the future of the company was going to go. So I started my own thing. I have a couple partners, Daniel Elpern and Sania Parrott. Daniel Elpern is one of the best traders in the market in what we do. And Sania is one of the best COOs or chief operating officers for investment companies that I've ever worked with. And we got together and formed Arena Capital. And from 2014 to now, we've grown our shop from effectively zero to about $3.5 billion under management. We also now not only do short duration high yield, we also do levered loans. We're starting to get involved in traditional high yield eventually. Right now is not really the time, but that's something that we look forward to into the future. And also SPACs and something called PIPEs, private investments in public equity, and just public equity in general. So it's been a long process here of how we've gotten to where we are. We're kind of at an inflection point. I mean, if you talk to us at the beginning of last year, we were right before the COVID crisis at around 1.9 billion. So we've almost doubled in size. You know, things are going very well. And really the crux of what Arena is and who I am and how I look at things is we want to find the best risk reward in the market. And I think other peers look at it differently. They want to beat the index. You know, there's usually an index that you have to track. So there's a high yield index, there's an equity index. Everybody knows the S&P 500. So an equity manager typically wants to beat the S&P 500. I don't look at it as I want to beat any index. I want to provide the best risk reward that I can for my investors. And that's why they invest in me. And that's why we got involved in SPACs, and we can get into that at a later time if you want here. You know, we've talked about it, you know, one-on-one in the past, Josh. But that is the crux of what Arena is. That's the crux of how I build our firm. And you know, really proud to say that I think 99% of the time I've been able to accomplish that. There's been a couple of hiccups within my career. COVID, I don't think we did that well, but coming out of COVID, we did really great, and we were able to, pivot and figure out how the market would behave afterwards. And I think we didn't take advantage of every opportunity, but we were really able to think outside the box, get the best risk reward, and beat every one of our peers since probably April of last year.
Yeah. So do you think, did you start out with SPACs in mind, or was that part of the pivoting that you went to SPACs, or has that always been part of the game plan?
That was definitely part of the pivot.
Well, first off, tell people what SPACs are, like you told me when we sat down at the pool. But what are SPACs?
So a SPAC is a special purpose acquisition company, and other people call it a blank check company. And it's very important to differentiate what a SPAC used to be and what a SPAC is today. A SPAC used to be a 4-letter word, so to speak. And it was not necessarily designed appropriately for investors. So we were for sure we didn't even look at it back then. I thought it was just, forget about it. I didn't even think about it. It was that bad. But over the past several years, things have really changed. And what has changed? So what I describe it to a layman is you give somebody, or I'll give somebody $10, and they take that $10 and they're required to put that $10 into a trust. Now, what they do is they don't just get $10. Let's say they get $200 million from all the investors. What this company that you give it to, their job is to find another company to be able to buy and take public. So a SPAC is a publicly listed equity, so to speak. I don't view it as an equity, and we'll talk about that in a second. But it's a vehicle that allows a company, rather than go through the regular IPO process, or rather than go through a direct listing process, and everybody knows IPOs, direct listings are new, but it's just a way for a company to go public. And let's say, I think the biggest SPAC out there is a company that is run by a VC firm called Altimeter. And while the SPAC is itself not that big, the target was super huge. And they're in the process of buying a company called Grab. So Grab is equivalent to like an Uber plus like a fintech, and also kind of like a DoorDash. Like it's an Uber, DoorDash, and a way to do digital banking, all rolled into one for Southeast Asia. And it's one of the biggest. Everybody knew that this company would become public. It was at a $40 billion valuation, and it was really surprising that a company like that can go public via a SPAC, that they would want to go public via SPAC. But Altimeter is one of the best VC firms that exist, as far as their track record, as far as just what they've been able to accomplish with the choices that they've made in early stage investing, mid stage investing, and all the companies that have come public. And I don't need to toot their horn anymore. But what we have had an opportunity to do as a SPAC investor, so you gave Altimeter in their acquisition vehicle at $10, or let's call it $200 million, and they went and they decided to find Grab as a potential acquisition. Now, the SPAC investor now gets a choice. They get to choose: do we want to participate in Altimeter buying Grab, Altimeter acquisition company buying Grab, or do we want our money back? It's as simple as that. You literally have a choice. Okay, look, the stock went up, and maybe it's at one point it was trading at 12 or 13. Now it's trading at like 10.50 because the SPACs are a little bit weak right now. But eventually, Grab is going to be like an Uber, an Uber plus, an Uber that makes money, is the way that I look at it. And it could be a great acquisition. But as a SPAC investor, I don't really care after the acquisition. Well, it depends. If you want to stay on, you can care. But what I'm doing primarily for a lot of our investors, and have a huge decision to make, you get to invest in one of the best VC firms in the world, and they choose what they want to buy. I agree with that, but you choose whether you want to participate or not. And if you don't want to participate, take your $10 back. If you want to participate, if you think they made a good acquisition, you can vote to not redeem your shares. And there's another option. The stock trades up, it goes up to 13 or 14, and you sell it before even the deal closes.
Why do SPACs always stay within like the $10 mark? Like,
they don't, it's not 100% of the time.
Yeah.
I think there are a few of them, like the Ackman SPAC, which is the biggest SPAC of all time that has no acquisition yet and has a lot of headlines in the news. That one has a $20 base, but it's the same thing. You can get your $20 back on that. If you gave your 20, then you can get your $20 back.
Yeah. So is it riskier to invest in a SPAC? I mean, I know people, I've talked to one guy who said, why bother with a SPAC? It's too volatile. It's not for me. What do you say to people who are, I mean, investing is you're either this way, that way, there's this philosophy, there's that one. So what would you say to that guy who told me, actually it was in Cabo before I met you, and he said, I don't even deal with SPACs. That's just not my jam. It's not what I do. What do you tell people, or what do you say to people like that?
I would say they don't understand what SPACs really are.
Yeah.
They're talking about a de-SPAC. After the acquisition is closed and you don't have your redemption right, a lot of these companies are very risky. I mean, a lot of them are kind of late stage VC, and you take a big gamble. I would equate a lot of these de-SPACs, once it's really just an equity, right? After it's done being a SPAC, it's a regular equity. Those are, pretty volatile, and it makes a lot of sense. You're buying a company, sometimes like space companies come out as SPACs, for example, a company that has zero revenues that in the future is going to create a battery like, QuantumScape. Some of them have real operations. So, some of them are less risky. One of the big companies that I see that's actually trading pretty well is Landry's. So the Fertitta Group, Landry's is becoming public via a SPAC. And that's like the Golden Nugget, Mastro's, for some reason it's not going to Chart House. He owns a whole bunch of restaurants. So you're buying a restaurant chain, a Double Eagle, a restaurant chain that is well known, that's very profitable, that had some tough times during COVID, like every other restaurant, and Golden Nugget, a casino, and I think there's another couple of things. And if you look at that, hey, it's like MGM, but you got all these restaurants and you actually own your property. Like he still owns his property. So I would say that SPAC is less risky. But QuantumScape, super risky. Nikola, super risky. But he's right there. But he's wrong on what a SPAC is. Because on a SPAC, I have a redemption right. So I can, on this grab, for example, right now I have an option. There's going to be a vote. It's probably going to be in another 2 to 3 months. And I'm going to have an option. And I'm going to be able to see three things. I'm going to have three choices. Number one, do I want to sell security above 10? Number two, do I want to redeem at 10? And number three, do I want to participate and just move forward with the company? And then it becomes a risky investment, but it's not a SPAC anymore. As a SPAC, and anything, like this is the biggest thing. When you say that it's more risky than equities or imply that, it's an equity always has a capability to go to zero. Even Apple, if they make the wrong decisions and they just do stupid things, frivolous things, if something can happen, and you can even on Apple be zero. On a SPAC, you have an escrowed account protecting you at $10, which should be your initial investment. Now, if you buy over 10, that is risky, and that's not what I necessarily say is the best idea. You're investing as if it's an equity. But even if you do, let's say you buy it at 12 and you buy another equity that's not a SPAC at 12, guess what? You have 20% downside on the SPAC. You have 100% potential downside on the equity. So that's why I say the person doesn't know what they're talking about. Or maybe they do, but they're not being specific enough with you to understand pre-acquisition and post-acquisition.
Yeah. Well, he also had a money manager. So I think the money manager he was just regurgitating what his money manager told him. He says, I don't really touch any of my stuff. I get my 8%, 9% a year, and I'm happy with that. So That's where that guy.
8%, 9% a year is spectacular.
Yeah.
But I will say that if that equity manager, or if he's, the only way you could have achieved those returns is to be involved in equities, and valuations right now are, pretty high historically based off of multiple levels. Some people blame it on treasuries. Some people blame it on a variety of different things. You know what? If you are, I like to look at return on capital. And if you look at a company that's trading at, 100 times revenues, when are you actually going to ever get that money? I mean, when is the company going to return capital to you?
Yeah.
And, that's a fixed income mentality. It's not an equity mentality. I get it. But within these SPACs, I look at it as a fixed income investment. And right now, because the market is so weak, you can buy a lot of SPACs under 10. So that's the other thing that we haven't talked about. Like, you can buy a SPAC maybe at 965, and I don't really care who the sponsor is.
Mhm.
As long as you verify that my accounting sense, as long as you verify that the trust proceeds are there. Sometimes they're even more than 10. There's a variety of reasons for that. But let's just call it that the proceeds of 10 are there, and you buy it at 965, and those trust proceeds are required to be invested in government treasuries or T-bills. So you can get a 3.5% return, within 2 years or less on treasuries. And if you look at the 2-year treasury rate right now, look at my screen, it is currently trading at 0.21%.
I love that
So-
you had to look at it real quick.
So it's trading right now at 0.21%. So the fact that I can tell you that I can get you a 2-year or less return of 3.5%. So if it's 2 years, it's 1.75%. But in the market, you can only buy it for 0.21%. I mean, it's a great offering. And I think everybody should have a allocation to cash. But imagine having an allocation to cash here that you can actually get a return on. You can't do that in your bank. You can't do that in a CD that you're locked up on.
Yeah.
But you can do it in SPACs right now. And we have a variety of different investors, some of which want to invest for the long term. So they want me to identify the companies that we will participate in going forward and of course, redeem when we don't like the company. There are other guys that want to just invest for fixed income on the other spectrum. And we're buying a lot of things in this 960, 965. I mean, Apollo Capital, one of the biggest, private equity / overall investment managers out there. They just announced the other day that they want to start a $500 million SPAC fund. And I'm sure that's going to be devoted to buying these things at really cheap levels. And not only that, any of those SPAC companies can end up having a really good acquisition. Right now, acquisitions are not trading up, but eventually they will, because people are going to realize, like Landry's, they're real companies.
Mhm.
And some of these companies are exciting. Grab is a real company. That's a $40 billion company. Even if you value it at $20 billion, I mean, it's so much more. I don't want to get into like fundamentals here, but there are companies that are spectacular coming out of SPAC, and everybody is painting with a negative brush right now. But that will change, and and the pendulum is swinging. And I love being involved in a market right now that is evolving. There are different parts of the market that are evolving. And by being a participant, I also feel like I'm helping it evolve. It's working in a way that I help push it to. I mean, we have over $1 billion invested in SPACs right now. We have a voice in this market, and we're using it.
Yeah.
And we partner up with certain sponsors, and we do all these different things. And I just think we're building a huge franchise here. And people in the press, they can be negative on this all the time. And sponsors, yeah, they make a ton of money. That is starting to come off the table. Things are evolving, adjusting. And eventually we'll have a more, regular mill product that's not going to have all this vol. But hopefully we'll be a participant in this creation of a new market. And I look at it, one of my mentors, Larry Post, he worked for Michael Milken, and Michael Milken developed the high yield market effectively. That was him. And I view this SPAC market as maybe this is something I'm not going to do it. It's a group of all of us investors. It's going to be a collaborative effort, both on the investor side, on the banking side, and on the sponsor side. It's eventually going to be really, really high quality companies. There are going to be some that are late stage VCs. I get it. I mean, it's exciting for investors to have that type of potential upside. You imagine investing in Tesla years and years ago. I mean, there are a bunch of EV companies that are becoming public via SPACs, and not all of them are like Nikola. I mean, there's a company called Faraday. There's a company, Lucid, which I think is about to start producing and is known to be the Tesla killer, or talked about to be the Tesla killer. That's coming public via SPAC, and the list Fisker, the list goes on and on. ChargePoint, like all these different things. And right now, SPACs are given a negative light. But think about it. A lot of these companies that are coming public are very environmentally friendly. They are the wave of the future. Mm-hmm. And not all of them will survive. I completely agree with that. But some of them will. And some of them will be 100x returns. Some of them will be 5x returns. Some of them will be zeros. And it's the job of people like me to try to distinguish the difference, mm-hmm. and also to diversify. So let's say I believe Lucid is the Tesla killer. I'm not only going to invest in Lucid, I'll invest in 10 of them, and 5 of them will go bankrupt. 2 of them or 3 of them will get acquired or merge in with another company, and another 2 will survive and provide a 10x return. And that's one thing that the equity investor is not used to, and why part of the reason that SPACs are so volatile, in my opinion, is because they want everyone to be a winner. But as a VC investor, which I am not, but my understanding of how VC investments work, you can have winners and you can have losers. And if you can bat 300, you're killing it. Yeah. If you get 3 right for every 10 that you invest in, even if those 7 are zeros, those 3s will more than make up for the losses on that 7, yeah, and provide spectacular returns.
Well, and I know your opinion on this, but talking about negative investments, what are your thoughts on cryptocurrency?
Oh man. I'm not a believer. I'm a believer in the technology of why can't I even think about it right now? Of blockchain, yeah. But just in the form of a coin, in the form of putting value, like we can just use Bitcoin as the major example that everybody, a lot of people invest in. I'm still trying to understand Ethereum and all that stuff. But Bitcoin, I just don't think long-term it's okay for a government to have something that's not tied to anything, that they can't control, because then you can have rampant inflation and all this stuff. And also, I do believe that there could be nefarious things that occur. Those nefarious things will go away once regulation gets into place. I think it's just long-term, very difficult to believe in value. I understand this. There's a concept of scarcity, and there's only so much Bitcoin that can be created. But you know what? There's NFTs, follow the same type of thing. There's only one of that one image, but that can be duplicated. And also the other thing that can, I'll go super crazy on you. The other thing that can break the Bitcoin thing would probably be quantum computing, which is down the line, maybe 5 to 10 years away. And imagine if that can get, duplicate what you see in Bitcoin and totally, destroy the whole business there.
Yeah.
I mean, there's just more tech, and it's just a tech coin, and it can be. I just think that fraud can occur so much easier long term. Fraud can occur in the U.S. We found ways to try to circumvent that. But look, the government needs to control currency, or else you're screwed.
Yeah.
In my opinion, I mean, you're not going to be able to do what our Fed does, what Jerome Powell does. You're just not going to be able to do it.
Yeah. Do you have clients who ask about alternative investing, like the NFTs and the cryptos and stuff like that?
We have more conservative clients. I have seen people invest in it as a hedge, as SMUC insurance. Like,
And he'll probably call back 5 times. This is Kingston's buddy from Cabo.
oh no,
Yeah.
the one that called 50 times last time we were down there.
Exactly. So, and Kingston's down there right now. I don't know what he's doing, but so okay. So yeah,
Yeah. So I even personally have like a hedge. I have some SMUC insurance. I know my partner has some SMUC insurance. Really, the way that I like to, because I don't really believe in Bitcoin in particular. So I, bought some or an option on some miner. And I feel like, if Bitcoin goes up and if Ethereum goes up and if all this stuff goes up, then I'll make some money there. But it's hugely speculative. I do not advise anybody to do any of that. It's not in my being. Talking about risk versus reward, I don't like anything. I don't like to invest in anything that I think can be like on a one-off basis be just zero.
Yeah.
I don't like the binary outcome there. Yes, could it be $500,000 per Bitcoin? It's possible.
Yeah.
But could it be zero? Yes, it's possible. And that's not in my spectrum of investing. Not for me personally, and not for me, for my investors. That's not what they want to see.
Yeah. So how would you, I know you said at 13, you got into it and put your bar mitzvah money into it. Were you self-taught? Did your parents or somebody, how did you learn at 13 that that's what you want to do? Because at 13, I probably wanted to buy a surfboard or something. Like, how did you get down into that?
Maybe because my mom was loved gambling in Vegas, and that's how I viewed it. I thought it was gambling.
We're gonna have a stern talking to after this. So yeah, your mom was a gambler, and that's you got it from?
I guess I don't know. You have this. You see tons of people making money out of nothing. The more fundamental side of me didn't really. I tried to analyze different things from a quantitative basis back then. You want to know what the company does. You want to be excited about the product that was my mentality. I really didn't pay a lot of attention to the balance sheet or the profit and loss statement or anything like that back then. I know people that have and did, and kudos to them, and that's great. I did most of my understanding of all that in a not traditional sense of doing it in college a little bit, from understanding balance sheets from an accounting perspective. I don't know many people in my role that got to my role by doing accounting first.
Mm-hmm.
And really going from the concept of I want to get a CPA, and then you do everything to get a CPA, and then you shift over to investing, and now you want a CFA. You get the CFA, which is a chartered financial analyst. It is something very few people that I know have that dual thing of a CPA CFA. Mm-hmm. Most people that sit in my role start in an investment banking role. That's if my kids wanted to follow in my footsteps, or if any kid wanted to follow in the footsteps of trying to be an investment officer and have that as your career, or a portfolio manager, I would definitely advise them to be a banker. Mm-hmm. To be an investment banker and to go down that route. You learn how to dissect companies. That is your real job. And yes, are the hours crazy as you see in all of the publications out there where you're working 100-hour weeks? Yeah, it's always been that way. That's not different because of COVID. That's not different because of anything. I think the mentality of some of these people have changed, and maybe the social aspect of it has changed. But look, if you're going to work 60 hours a week instead of working 100 hours a week, it'll be better on your social life, but it's going to be worse on your experience. You're going to have less experience, 40 hours less experience a year. And you're less likely to actually reach to the top ranks. The only way to really succeed in this industry is with experience. And you got to be lucky a little bit too. It's not just, oh, I work hard and I get there. You got to get a little bit of luck. I had a little bit of luck with Larry, really him seeing me and it working, and for me to even join Post Advisory Group and having that opportunity, and especially lucky because of my background. Someone like me would not have been given the same opportunities typically as an investment banker. An investment banker has a much better chance to get to where I am.
How crucial do you think finding a mentor, like for you, it was Larry, how crucial do you think somebody getting a mentor in that role and play and pushing you? And like you said, he asked you to go ask a question and you already knew to ask 15 more to get to the result. Like how important do you think a mentor is to have in any aspect, in any career or anything?
I don't in this industry, I don't know of anybody that hasn't had a mentor.
Mm-hmm.
Like, even if you talk to Mike Milken, he's had a mentor. He has somebody that he wanted to be like. Now, I always think it's an important thing, and your mentor can be your dad, your mentor can be somebody that you meet. I've probably had, I think 3 mentors that I've worked with or been with. Definitely my dad for sure. I would say, and he was an entrepreneur. He was an engineer, so not what I do, but he helped me with my work ethic and understand that working hard gets you places and just gives you a better chance. Mm-hmm. So that was important. Next, I would say was my my boss for my accounting, or one of my bosses, the person that hired me. His name is Michael Gordon, and with him, he just helped me understand that there should be a balance in life. And it wasn't directly having to do with accounting or anything. It was just, dude, work hard, but when you don't work hard, make sure you relax and enjoy yourself.
Yeah.
And then Larry really helped me out with the industry and zoned me in there, and wanted to be as successful as him. And I'm still working there, working to get there. I'm on a path, but these are people that in my life that have influenced me dramatically. And I think it's very, very important to have somebody, and also to not just have like a mentor out there that you don't get to like check in with and don't talk to really. Like, I still talk to those 3 people, obviously my dad, but Larry is part of our firm. He's a minority partner, very small partner. And at the beginning, we talk more. We talk now. It's more like, hey, let's get together for lunch. Let's get together for dinner. Sometimes we talk shop when things are crazy, or if I know that he knows a company, or I know he knows a person at a company, I'm able to utilize that network as well. But really, it's just good to check in and make sure I'm on that path. Yeah. And Mike Gordon, he and I probably get together for dinner once every 2 months, and we just touch base. And he's also a good friend too, not just a mentor. And of course, my dad. You talk about all the serious stuff with your dad, or at least I do, still to this day, and really admire and appreciate that. But I think it's hugely important, very helpful, and helps open doors.
Yeah, for sure. So now jumping over to the investment side, if you have a brand new guy coming out of the gates, wants to start investing, where would you say they start with some of these Robinhood, E-Trades, Charles Schwab? Any books to recommend? Like, how do they hit the floor and start absorbing as much information as they can and research and knowledge?
What I most of the time advise laymen, unless they want to do it for a career, like a retail investor, in my opinion, should give their money to somebody else. Mm-hmm. Not necessarily me. I'm at a different level. I'm more institutional. But if my friends want to get involved, I don't like. Sorry about that. See, now it's my turn.
Well, I couldn't even hear yours though.
I don't like to try to say that you can get nearly the amount of knowledge as somebody else in this role, and it's worth paying somebody for it. So, but I would also say most people sitting in my role don't beat indices, and I would say, look, if you just want exposure, do an ETF. Fees are really, really low, and if you want equities, just buy there. Or you can do that also within fixed income too, which I don't necessarily think as a whole that's most of my assets. So by me saying as a whole, it's not the best investment right now because rates are so low and because spread the it's really just expensive right now. I think that's the best way to put it.
Mhm.
But a lot of people are required to invest in there, and that's why it's expensive. If you're not required, then it wouldn't be expensive. But the best way is just to do that. Now, if you want to gamble, you can gamble, and you can try to get, as smart as you want to be. You can know everything about a company, and still other people are going to know more than you, and they're going to be able to dissect it better than you. But you can be involved, like you can be excited. You can say, you can put some of your speculative capital, and I would really view it that way, and you can get smart on it. And from that perspective, you learn how to read a balance sheet. I mean, Benjamin Graham has some books out there. I think also psychological investing is very important. Understanding how other people invest, like that's part of why I think we view risk at Arena much better than others. Is I don't just say, what are the chances that this company is going to do this or this company is going to do that? I really view, what are the chances that a regular investor is not going to see what I see?
Yeah.
And is this the right time to invest? Because once they see what I see, this is going to go down or up or what have you.
Yeah.
And I think there's a book called maybe Thinking Fast and Acting Slow or something like that. I don't remember exactly. And it really goes into concepts of it tricks your mind. If you've seen some of those, brain teasers, it asks you a question and you immediately get the answer and you're wrong.
Yeah.
And it's so basic to you that no, that's the end. Like you're like, oh, that's simple. It's XYZ. And really there was one word in there that just converted everything. And when you read it again and again and again, or you hear the real answer, you're like, oh, I should have thought about that.
Yeah.
And most investors invest with that, that fast mind rather than that slow mind.
Mhm.
And for us, when I invest, we invest after we think slow.
Mhm.
We have to understand also what the investor is going to do by thinking fast. And that means if the market were to shift sentiment, what is going to happen to that security? And is this the right time to buy it? Because other people are going to are not going to really believe in the story that I do all this work. I spend, my analyst spends 3 days, dissecting a credit. But that's not going to prevent that. And he understands it better than everybody else. And we buy it cheap. But if the market turns, or if one headline comes out of China or something like that, then that security is going to go down regardless of what we know and what we've done the work on.
Yeah.
So that's why you need to, that's what I would recommend people to think about how other people are going to invest when they're making their investment decisions, and don't just get excited about something.
Yeah. Yeah, I think that's good advice because I'm not a day trader by any means. I look at it, and I have a spreadsheet that I follow and this and that, but I don't like trading. All of my investments for long term. I don't like doing the day to day, like, oh, is it up? Is it down? That drives me nuts because I'm not a gambler either. When we go to Vegas, Alicia gambles. I'm watching stuff and make sure everything's okay. But yeah, I like that advice though, and I think I'm going to reach out to, maybe you can recommend me to somebody. But so since
hold on a sec, Josh.
Yeah.
Okay, I'm ready.
Yeah. I appreciate all the investment talk and all the information you be given, but this is the Savage Waterman. I know you surf, so give me a quick surfing story, or how did you get into surfing?
As you can tell, I kind of don't surf. I try to surf. Would be a better way to put it. No, just when I was a teenager, I liked the idea of it. Actually, I started surfing a little bit when I was in my 20s. Nothing big, definitely small style. I have just a board that I bought intermediate 7.6. So I'm not one of those carving it up like you. I'd say as far as Savage, I'm more of a gymnast. I love doing flips. I can do a flip at any time, back flip, front flip, whatever. I even at my older age now, I can still manage to do that. Super proud of that. I think my son is trying to follow in those footsteps. Avid runner, and I think that's more Savage me, where I can probably still crank out a mile in under 6, and my best mile was around 4:30. My best half mile was a 2:01. So I think that's where my savageness comes out and my explosiveness. And what's weird is like I never understood that I had balance for gymnastics, but I could never, just stay on the darn surfboard.
Yeah. Well, speaking of, well, two things. One, when we were getting ready to go to Cabo, I sent you the surf report, and it was 22 to 25 feet. And I said, "You got your big board?" And he just nonchalantly wrote back going, "Yep." And I'm like, "Wow, this guy's ready to go. This guy, he's gonna kill himself or something. I don't know. He's ready for some bombs." And then he told me later over a margarita that he thought it was 22 inches. So he was bringing a big board for the big or the small waves. I thought that was comical because you didn't respond. And like after 2 days, I'm like, is he joking? Or like, does he know he's gonna go try to surf 20-foot waves? So, and another thing about the running, I had the yesterday I was running on the treadmill again because I hurt my calf in Palmilla, and I was running again, went up to level 10. I don't think I've ever done a mile in 6 minutes, but very impressive. And my damn hamstring ripped off again or something. I was like, oh shit. So I had to jump off, and 46 years old, man, things pop and creak and snap a lot easier than they do in my 20s. So yeah.
I don't disagree. I will say that, prior to my trip with you in Cabo, I was on another trip to Cabo, and we had a few beverages, and somehow we ended up having a race that involved sprinting. And the whole time I was in Cabo, part of the reason that I was only working out a little bit is I did tear my hammy when I was doing that. Yeah. So I was still able to run like a 7:30 mile on the treadmill, but I can only do a couple miles, whereas usually I'll do like 5 or 6 mile run. Yeah. Because I have a small something with my hammy as well.
Yeah. Well, I love the stories that start out by we were having some beverages, and then we always think we're younger when we have the beverages. It's like, oh, I can sprint, I can run, I can arm bar, I can do this, and it never ends well.
Well,
for me,
sometimes it does. Some of my best workouts have been done after a few beverages.
Oh, not
because I used to have this little like home workout gym in my apartment. This is back 15, 20 years ago. Yeah. And me and my buddy, part of our it would be okay. We'd get home from work, have a few beverages, sometimes more than a few, and literally we would be able to crank out lots of sets, do much more, like lots of dips, push-ups. It was all like I'm the type of person that I don't do a lot of weights. Yeah. I just do a lot of using my body as the weight when I work out. Yeah. And that I guess I'm savage on that. I mean, during COVID, I was doing 500 sit-ups a day. I was trying to get up to about 300 to 400 push-ups a day, and that that felt so good. And that was one thing that I can't. I'm sorry, I'm in the office now. Yeah. I can't do that anymore. I feel it's weird.
I believe you.
Sees me just like cranking it down.
Yeah. Well, no, when we were at Palmilla, and you told me the same thing, and then I was over there lifting weights, and you were doing the pull-ups and stuff. And I mean, yeah, you're fit. I mean, what, you 32 or something, but you're a very fit man. But no, I don't know how you drink. There's one guy I used to work out with, and he would get high as high, barely have his eyes open, but he'd be throwing weights around him. For me, I've never done that. I've never gotten any kind of inebriated or anything because I don't think it would end well for me. But to me, it's the prize at the end, like fighting or surfing. At the end of the day, sitting back with a margarita and rehashing the day's events, whether they're victorious or not. That's that's what I like to do. Except for in Cabo, where we started.
Did you say Cadillac margarita? Because it's just a Cadillac, not just a margarita for you.
Has to be a Cadillac. After you guys left, well, I think when you were there, I got a big bottle of Grand Marnier. Yeah, I told you because they ran out of Palmilla, and I said I got some in my room. But when we first got to Cabo, we went surfing, the girls went shopping. I had to give away some of that tequila when some people that we met at the pool and stuff, because I had a bottle of Casamigos. I had the Cabo Azul. I mean, I'm like, babe, how much do you think I drink? Like, I can't drink all this stuff. So I made some friends at the pool, and I gave them all my liquor. So, but yeah.
I guess you're moving on because the previous time you gave me the liquor.
Yeah, but this last time you stayed longer than me last time. So this time you got out of there a week before I did. But
Yeah.
yeah,
Okay, I'll give you that.
but I
I'll give you
appreciate
that.
I appreciate you coming on, my man. I think it's October, right? When we go to the Stones concert.
Yeah, October 17th is, rest in peace, the drummer Charlie.
Charlie Watts, yeah. He wasn't even going to do the U.S. tour anyway, but I didn't know it was because he was ill. I just thought he just didn't want to deal with it because of COVID. But yeah, sad news. Charlie Watts died of, I think, just natural causes. They're saying, I don't know, but either way, we're going to the Stones concert in a month. So
Yeah, no, that's gonna be exciting.
yeah, well, I appreciate it, Jeremy. What's that?
It's gonna be a lot of fun.
Yeah, definitely some Cadillacs going on that night.
There'll be a lot of stuff going on that night, I think. I think we might end up getting high, not because we do that, but because around us, I think there's gonna be a lot of that stuff going on.
Yeah, well, when we do
Luckily,
that,
we're gonna have a driver the whole time.
I'm not gonna go work out after that at any means. I'm just gonna be sitting back and enjoying the show. All right, brother. Well, I appreciate it. Thank you for your time.
We'll chat soon, my friend.
I'll talk to you soon, brother. See ya.
Take care. Bye.